Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, in the last 24 hours, the Australian dollar has edged further to the upside, taking the resistance of 73.30 area and moving on now towards the resistance of 74.1020, which is also seen where the 60-day moving average is, where you can see here, if I just outline it. Now, from this region, the market is likely to take some caution. As we can see here, back in August and also before then, the market was somewhat negative. In light of the pattern rebounding off the lows around 71, the market is caught short possibly, and also with the dollar index slipping back to 92.40, the market is getting a little bit carried away. However, iron ore fell overnight, and there is some other aspects that does put some concern about this pattern, and therefore could see this short covering ahead of the non-farm payrolls number, and also the fact is the market could eventually end up in a bull trap close towards that 74.1020 level. I'm not going to get bullish at the top side of its range, although it has cleared a couple of levels. That has put me in somewhat of a sort of a view that the market squeeze is not going to get a little bit uncomfortable towards that 74-cent level, but still, let's see if the market can reject from there and look back towards the support level seen at 73.40. Now, a close underneath 73.40 would give further indication to the bear case. So let's keep an eye on this level. I just like to outline it. So it's roughly around this region here, half of this candle, and also from the previous day's top. So if we do get a break of this level, would reinstate the downside back to about 72.50 and reassess. Looking at the euro, the market is still pushing to that top side and ahead of its non-farm payrolls number. The market is now sifting through the recent payroll ADP data that came out overnight that created far less jobs than expected from the report, with the private payrolls rising just 374,000, missing the 640,000 jobs, has given somewhat a bit of a shaky start into the end of the week. Still, the dollar did slip on the back of that, and still the market is looking to the non-farm payrolls number to be strong from the forecast of expected 750,000 jobs added. Along with that, the unemployment rate is expected to fall from 5.4 to 5.2. Now, the dollar index, which we all know covers the US strength against a basket of 6 major currencies, has fallen back from the rebound of 92.40 and is trading roughly around that level. If we do break underneath there, would give certain risk to a squeeze up to the top side for the euro at 118.70.80, and clearing this level would give a somewhat firmer stance in towards that 119 region. But I think the market will be a little bit cautious as we get closer towards these tops, as we saw good supply returning, and I do anticipate it again. The support seen at 117.95, and a break beneath there would give further scope to 117.60 to 116.75.80. Interesting to see dollar yen takes another stab at this 110 level. We've seen many stabs up there, and it looks to me that there is some kind of strong supply, or somewhere around that sort of view that the market's likely to produce another spike if trading above 110.40. That was the high overnight, so let's see if the market rejects that previous level. We're getting many candles here that support a bear case, even though the RSI is respecting this midway point. A close underneath the level of 109.70 should see further risk towards 108.60.90 as a target. Sterling still nudging its way higher, but still a little bit cautious towards that topside resistance seen around 138 figure 20. Overall, though, I feel the market is in a place to see one more test there, considering that the RSI is strengthening up along with the MACD. Let's see how the market plays into this. We've seen a couple of spikes there, and if we see another rejection from this level, it's quite surprising that the bulls are getting a little bit sure of themselves in a way, due to the fact that the risk of the number into this Friday can still be a stronger number. But nevertheless, if it is a weaker number, then they're in a better place to trigger a rally on to 138.80. Looking at this price action over the last 48 hours for sterling yen, the market continues to press at this level at 151.70. We did see a brief spike above it, but this time the market's hitting it quite strongly as the European session opens. Let's see if the market can close above there from a New York view, that is, close of 151.70, but this would put a short squeeze to 152.30.40. Gold still remains listless. More to the fact is, no direction. And even though the US dollar is slipping a little, the bulls aren't prepared at this stage, by the looks of these candles, to take the challenge up towards that topside range around 1,830.35. The lack of momentum in the RSI, and also keeping an eye on this MACD, could still see a downturn. But we need to take out the support level of 1,795 to initiate a move down to 1,770. But because we're holding in a positive signal between the two, we should still not rule out, in case we see that last test up towards that top side, and no doubt the bears will be ready to take on an ambush, the challenge around that 30-35 area. And wrapping up with oil, well, it seems that as market digests the OPEC decision to continue supply increase, we've got a few interesting candles here, one being a bearish dragonfly, and that is the fact the market's still a little bit whipsawed as it gets closer towards that top side level around $69.70 to $70 a barrel. Now we're close underneath the level of 67.50, and it was close there today, and we could see a further slide towards 66.5 and then reassess from there. Well, that wraps it for today. Thank you very much for joining me. As always, look out for the intraday poll, and I hope you enjoy the rest of the day.